Is the Fed about to pivot? And if so, what does that mean for crypto? What does it mean for stocks? And what does it really mean for really all risk markets? And while there have been spikes in stocks and bonds and commodities, is this actually a signal that the Federal Reserve is about to change course? Is everyone right now simply trying to front run a Fed pivot? Or is this just a big damn bull trap? Well, let's start off with what is a Fed pivot. The technical definition of a Fed pivot is when a central bank reverses its monetary policy from either loose to tight or from tight to loose. But with investors just desperate for the next bull market to begin, everyone in financial markets right now is trying to anticipate, is the Fed going to pivot? This means the definition of a pivot kind of to an extent is becoming more distorted and harder to define from one person to the next. We know the Fed will need to slow down interest rate hikes, to pause the hikes, and to eventually cut those interest rates at some point and resume quantitative easing. The only problem is we just don't know when they're going to do that. But by the technical definition of a pivot, a slowdown in interest rate hikes isn't it, but it's more likely a shift in the Fed instead. So where is the Fed heading? A shift towards the pivot? Well, the bond market is becoming increasingly illiquid. The Fed is increasing interest rates in recent months, and that has led to huge volatility and poor liquidity in the Treasury market. The volatility has made it both harder and more expensive for investors to buy and to sell government debt, aka Treasuries. There has been talk that the Federal Reserve is already starting to buy back Treasuries, essentially providing liquidity into the Treasury market, because right now we are seeing a situation where liquidity is worse than or as bad as it was back in March 2020 when the COVID-19 crisis kicked off, as this chart here shows. And the Fed intervened at that time massively into the Treasury markets. Now, without liquidity in the market, this causes yields to continue to spike higher. A Fed Treasury buyback stops this from happening and restores calm and order into the markets. And yes, wider markets would take this action as a sign of a pivot from the Federal Reserve. Right now, we are seeing commodities leading this market cycle. Look, a spike in commodities usually signals the end of a period of economic contraction, as you can see on this chart here. So precious metals like gold are usually the first movers when the Fed is about to change course. And gold was up 10% this month. For a traditional store of value, spikes as large as this are not normal. And it has also reclaimed all relevant moving averages during this big price spike. Now, for reference, 10% for gold is equivalent to 3 times the total market cap of Bitcoin and is worth about all of crypto combined. It feels like the market is trying to tell us something here. We also know a lot of central banks have been boosting their reserves with gold. Now, according to the World Gold Council, demand for gold has risen by 28% this year, and Q3 saw a 55-year high demand for gold from central banks. Turkey, by the way, has been leading with the gold purchases. And of course, considering their 85% inflation rate, I am not surprised. Now, before diving into whether inflation has peaked and how the market might react to a pivot, I just want to let you know about my weekly crypto investor newsletter. It's called Wealth Mastery. It's jam-packed full of alpha on altcoins, on airdrops, on NFTs. We have DeFi tutorials, market analysis, and much more. Join our 50,000 weekly readers by signing up for free using the link in the description. So, has US inflation finally peaked? This is a big question that we need to ask when talking about a potential Fed pivot. Well, last week saw US inflation drop from 8.2% down to 7.7%, lower than the 7.9% which was expected, and it is at its lowest level since January of this year. Truflation, powered by Chainlink, just a little detail there for you, even has CPI a little bit lower than the official number at 7.18%. This is the first sign that we may have reached peak inflation, and the raised interest rates are starting to really have an impact on the situation here. Fed Chairman Jerome Powell has recently said as well that it's still a bit premature to talk about pausing rate hikes, but with increasing unemployment and lowering CPI, we may see a pause a bit sooner than thought. So if the Fed is about to pivot, well, what will happen then? Well, let's look at what happened in previous pivots to try and understand a little bit of the situation here. Last time the Fed made a pivot on monetary policy was back in 2019. The Fed had raised interest rates 4 times in 2018, getting up to 2.5%. In December of that year, they had plans of additional rate hikes over the course of 2019 to fight off inflation. Following that announcement in December, the markets fell sharply right across the damn board. Stocks, bonds, and especially crypto. The Fed had to change its tone in January of 2019, basically pausing those rate hikes. They then started to pivot, reversing rates throughout the rest of the year, finishing at an interest rate level of 0.25%, as you can see on this chart here. Now, when the Fed announced that they were going to pause rate hikes, the markets began to rally. It looked like the bull market was back on, baby. Shortly after, the Fed officially made their pivot, i.e. they made their first interest rate cut. And then the S&P 500 did indeed rally hard. However, once more severe rate cuts were required and then actioned, the market began to sell off hard. Large interest rate cuts signal that things are not actually going that well and that economic conditions are not super awesome. Thus, we can expect markets to fall if that happens. So how now can we expect markets to react to a Fed pivot event? Well, with all the hype surrounding the Federal Reserve and the potential for a pivot, you would think that this will end up triggering the next 10-year bull run, mega time, baby, yeah! However, historically, when the Fed has previously pivoted, stocks actually tend to crash further. Inconvenient but true, as you can see on this chart here. So, you will still need to be cautious in the markets. Things could get worse after an initial pump in the markets, after that initial euphoria gets over. So you'll need to be on guard. When the Fed does pivot, and given its mandate, it's likely to be probably sometime, well into a recession, right? It'll want to get the economy moving again. More money will be printed, and it's going to find its way into assets. It always does. Don't forget, there is more debt in the system, so more liquidity is always going to be needed to keep the damn lights on. Once more liquidity is provided, markets will start going up. But that could be a while still. Okay, that's it. Subscribe now. See you next time.